Everyone. Please permit me to borrow a what from the book of Walter Rodney, titled "How Europe Underdeveloped Africa." The book really talk about. Okay, let me quote from the book. Western countries continue to grow their economy due to their financial inclusivity, whereas underdeveloped countries will continue to depend on Western world because of their financial exclusivity. My name is Gazali Muhammed. I'm a banker for about 2 decades. Before then, I was an academic teaching economics for about 2 years. Today, I'm going to talk to you. I'm going to talk to you about the Nigerian financial inclusion journey. I'm going to be guided by the following outline. I'm going to talk about the financial inclusion, looking at the Nigerian context. We also look at the status of the financial inclusion in Nigeria. That is from the beginning of the journey. And then also, we look at the comparison between the target set as a country and also where we are in terms of country. Then we look at the implementing challenges and possible opportunities to be derived from the challenges. We look at the possible consideration and recommendation. Then I will conclude my presentation. Okay, financial inclusion. We're looking at the Nigerian context. So one will wonder what financial inclusion is talking about. So simply, financial inclusion is achieved when easy access to financial and affordable, easy access financial services is achieved. So the striking words here are very key, or the keywords here: easy access to financial services. Then secondly, you look at the broad range. That's varieties of the product to be provided in financial services. Then you look at whether the financial product meets the needs of an individual. Then affordability is very important. It will not make sense for a borrower to go and take loan at a very high cost. So there has to be that affordability when it comes to loan. So financial inclusion, the whole presentation is talking about the journey when Nigeria signed Mayor Declaration in 2012. That Mayor Declaration is a commitment by the Nigerian government to achieve certain milestone in terms of level of inclusion in the country. So I will use some empirical data to justify or to explain how the journey started and where we are in terms of financial inclusivity. So over the last 15 years, formerly SAP has moved, let me look at, let's look at the figures. The blue color indicates the bank segment of Nigeria. We're talking about at 2023. This figure is according to EFINA. EFINA means Enhancing Financial Inclusion, Access and Innovation. Report 2003. It's talking about, they said Nigeria currently 50% of Nigerians are currently financially included. What that means is about 58% are somehow excluded. So specifically, 20% of Nigerians are financially excluded. Those that are completely outside financial system. People that keep their money at home. People that hide their money under their mat or under their under bucket or whatever. While the 12% indicate formal others, there are some people that are engaged in adasi, asusu, all this, we call them formal others. So those ones constitute 12%. Because of the time, I may not be able to take us through the journey from the transition from 2028 to 2023. Let me just focus on where we are so that you know we started from 2008 where we were at 21% inclusive. Where we are now, we are at 50% inclusion. So while the green portion is talking about the formal others, there are some people that keep their money in microfinance bank, insurance, pension, while the red segment is the red bar. Those are the quantum of people that are not within the financial system. So, in summary, if you look at it, the whole figure is talking about 9% gap between financial inclusion rate, i.e., if you look at 79% versus 70, that is for women. That women constitute the highest segment of the exclusion rate, followed by youth, rural, and Nigeria, northern Nigeria. So, I talk about the comparison between the target that the federal government set as a country and then to where we are. Then you now see the variance and the required rate that we need to do to achieve the target. As of 2023, we're at 52%, while the target for the country is 70%. It means we still have some gaps to achieve, and then in terms of payment, savings, credit, insurance, and pension. So what that means is we have a long way. We are just some few months away from 2024. We are probably by the year end 2024, when the figure is out, we see where we are in terms of exclusion. So looking at the actual as at 2023 versus where we are. So look at the implementation challenges. What accounted for this disparity? One is the drivers of exclusion, like limited income because of the low income or people. Then we look at the channel of dispersion. The agent locations, most of the agents are located in the urban area rather than rural area. Then we look at the product. There's no varieties of product to cater for a lot of people. And then financial deepening, and then we look at the key consideration and recommendation for financial inclusion. One, we look at the outcome driven. That's the effort must be put in place for everyone to come together and then come up with a policy document to address the issue. Then we also look at buy-in of the implementing agency. Then we look at the reward mechanism, where for any agency that brings in a newcomer, then you'll be rewarded, so that to encourage people to participate. Then cross-functional collaboration among the key stakeholders. Based on what that means is what we need to do. Based on the recommendation, we need to come together along with other implementing agencies to achieve where we intend to be as a country. So thank you so much. My name is Muhammad. Thank you so much.